Hey guys, I'm Greg Hardy and welcome to my channel. Investing can change your life for the better. And no, you don't have to have thousands and thousands of dollars to get started. In fact, in this video, I'm going to show you how to get started with as little as $100. The most important thing you can do is to get started investing, no matter how large or small your investment dollars are at the beginning. I will also include a risk level for each of these investments from low to high to give you a better level of understanding of what you're investing your dollars into. There's really only three things that you can do with money: spend it, save it, or invest it. In this video, we will cover two of the three: saving money and investing money. Saving money is best when you have short-term expenses or goals that your monthly income wouldn't cover on top of your usual spending, like a down payment on a home, for example. While investing is more for financial goals that are at least 2 years or more away, let's go over several ways that you can save and invest your hard-earned money so you can begin creating real wealth for you and for your family. But before we do that, I ask that you hit that like button and also consider subscribing to this channel if you would like to grow your wealth. It will also allow this video to reach a wider audience and help even more people. Let's get started. High yield savings account. Risk level low. Before you begin investing, be sure you've taken care of your more immediate financial needs, like paying off high interest debt and building up an emergency fund with a minimum of 3 months worth of living expenses. To do this, place your money in a high yield savings account so that way you can earn a little extra money while your money sits there. Two important things to consider when placing your money into a high yield savings account, and that is the interest rate, which is the higher the better, and do you have 24/7 access to that money? I mean, emergencies don't always happen during regular business hours, right? I've personally had an account with Ally, and currently they have a rate at 4.2%. Books, risk level, low. While reading alone won't make you rich, it can give you a competitive advantage over others and teach you how to build real wealth. Wealthy people never stop learning and growing and are constantly looking for ways to improve themselves. Billionaire and Microsoft founder Bill Gates says he reads 50 books a year. Warren Buffett said he reads about 5 to 6 hours every day. Mark Cuban is also a billionaire and the owner of the Dallas Mavericks and spends about 3 hours reading every day, and he attributed his early career success in life to reading. Personal finance books teach us how to manage money, save, and invest wisely. They give practical advice on budgeting, saving money, and making smart investments. Business books help with career growth and starting a business, while reading inspiring stories can motivate. Taking action on what's learned is essential for success. Index funds and ETFs. Risk level, moderate. Investing in ETFs and mutual funds, which are baskets of investments that include dozens, hundreds, or even thousands of stocks. These products can track various assets like stocks, bonds, currencies, commodities, or even the entire stock market. Since you're investing in a large basket of stocks, it reduces the risks and is generally a safer investment than individual stocks alone. There are index funds that focus on growth, others that focus on dividends, and some just track the stock market. If you invested $100 per month for 30 years at an average return of 8%, you'd have over $142,000. That's the power of compound interest. Simply invest in a fund that mimics the S&P 500, like SPLG, SPY, or VOO. In order to own the index funds I just mentioned and to protect your profits from being taxed, you can open a Roth IRA here in the U.S. A Roth IRA allows you to contribute your after-tax or net dollars into it. In 2024, an individual under age 50 can contribute a maximum amount of $7,000 into a Roth IRA. For those of you over age 50, you can contribute an extra $1,000 per year. The beautiful thing about a Roth IRA is that all gains grow tax-free and all withdrawals made after age 59 and a half are tax-free also. Another way to invest your $100 is if you work in an employer who offers a 401k. A 401k is a tax-deferred employer-sponsored retirement account that offers tax benefits and also helps you plan for the future. What I mean by tax-deferred is that you don't have to pay any taxes on the money that you contribute initially into your account. Once you turn 59 and a half, you can begin withdrawing the money from your account, and that's when you pay taxes. A huge perk of a 401k is that most employers offer some form of matching percentage, and that usually falls in that 3 to 6% range. Take advantage of this. It's a guaranteed 100% return on your money and can really accelerate the rate at which your money grows. Real estate investment trusts, also known as REITs. Risk level, moderate. For a more passive approach to real estate, you can own a REIT or a real estate investment trust. REITs are similar to a stock or mutual fund, as you can buy shares and hold them in your portfolio. REITs invest in a wide scope of real estate property types, including medical facilities, data centers, offices, apartment buildings, hotels, warehouses, and shopping malls, among other things. They tend to pay a nice dividend, whether it's monthly or quarterly, which is money paid to you just for owning the stock. Starting a business. Risk level, moderate. Whether this involves buying or selling something that you have knowledge about or starting a business from scratch. Either way, this can lead to sizable returns. Buying stuff at the Goodwill or at a yard sale and flip it on Facebook Marketplace or eBay. Find out what things are worth, research that market, and turn it into a profit. Businesses like auto detailing, tutoring, lawn care, at-home non-medical care for seniors, house or pet sitting require little to no upfront capital to get started. Find something that you're knowledgeable or passionate about and start there. Gold. Risk level, moderately high. While I don't call gold an investment, it is definitely a hedge against the dollar and inflation. The US dollar has lost over 96% of its value since 1913, when the Federal Reserve took over the dollar. The Fed devalues the dollar by printing more dollars without creating any value. Unlike the dollar, gold can't be produced or printed into oblivion. The two ways to invest in gold is through owning the physical metal itself, and the other is by owning an ETF like GLD, both of which I've personally done. When you buy physical gold, you have to factor in the spot price and the markup price. Whoever you buy gold from will want to make a profit, and therefore you'll tend to pay more than the spot price. You can buy the GLD through your favorite stock trading broker. At the time of this recording, there is presently $61.71 billion invested in the GLD. Silver, risk level, moderately high. Sometimes referred to as the poor man's gold, silver can be a much more affordable option than gold. The gold to silver ratio is roughly 1 ounce of gold equals 82 ounces of silver. That means that you can buy 82 ounces of physical silver for the same price as 1 physical ounce of gold. You can also buy silver with the ETF SLV. Like gold, silver is a safe haven metal that will help investors hedge against inflation and any economic downturn. Also, silver is a widely used metal in the industrial sector and is an essential financial commodity invested in portfolios. Many industrial appliances use silver because of its high conductivity and rust resistance. As a result, you can expect silver investment to continue growing even as the global economy expands. Individual stocks. Risk level, moderately high. Buying stocks is the easy part. Knowing which stocks to buy and how to manage them can be much more complicated. I mentioned mutual funds and ETFs earlier, and how they are a basket of stocks which spreads the risks out over the entire fund, while single stocks are exposed to 100% of the risk. Think about 2020 during the pandemic. A surge in online meetings drove up the stock price of Zoom by about 700%. All the while, demand for gasoline plummeted, driving the price of ExxonMobil down 42%. Some stocks can be pretty expensive. Take, for example, Facebook, Apple, Microsoft, Amazon, and Tesla. Fractional shares can be bought or sold over time, just like other investments. In fractional shares, each share of a company's stock is divided into a piece or a slice. A fractional share is when you own less than one whole share of a company. Fractional shares allow you to invest in stocks based on a dollar amount, so you may end up with a fraction of a share, a whole share, or more than one share. Many online brokers are a great option for investing in fractional shares since there are no commissions and no minimum balance required to get started. Fractional share investing can be a good option for any investor who wants to diversify as much as they possibly can. Investing in single stocks requires a lot of analysis, timing, and luck. Company news, industry happenings, world events, and economic conditions can have a drastic effect on a single stock. Sure, investing in single stocks can be exciting, but more than likely it won't provide the best long-term results. In fact, the New York Times came out with an article in 2022 after analyzing 2,132 actively managed funds. These are stock experts who devote their lives to picking the best times to buy and sell individual stocks. And do you know how many beat their target benchmarks? 0. Cryptocurrency. Risk level, high. A cryptocurrency is a digital asset that's connected to a blockchain network. Cryptocurrencies like Bitcoin and Ethereum are different from stocks and real money. Crypto is not regulated like stocks or insured like real money in banks, and no one really knows what it's going to do next. Crypto's high risks can offer big rewards though, or huge losses. There's an estimated 46 million Americans who own at least a small fraction of Bitcoin these days. Since you can't just print Bitcoin, there's no fear of inflation. If you decide you want to invest in Bitcoin, you can do something through Coinbase, but only do so with money that you don't need. Penny stocks. Risk level, high. Penny stocks refer to stocks that trade for less than $5 a share. You may think that because you don't have a lot of money to invest that these would be a perfect strategy, but penny stocks have a lack of liquidity in the marketplace due to the nature of the company and the small size of the shares. Penny stocks are typically referred to as speculative in nature, and if you overinvest in them, you stand to lose your investment, which makes them a potentially risky venture. Not all penny stocks are scams, but most of them offer no real chance for growth. Penny stocks are risky, and there's not a lot of information available on most of the stocks that trade over the counter, meaning that they are not listed on a major exchange in the United States and are instead traded via a broker-dealer network. With so many alternatives to penny stocks that allow investors to start investing with $5 or less and still enjoy solid historical returns, there's really no reason to see penny stocks as a wise investment. While $100 can open doors to various investment opportunities, you must have realistic expectations. $100 won't transform into a fortune overnight, but it is a step in the right financial direction. Remember that before diving into investments, it's essential to address immediate financial needs, such as paying off high-interest debt and building an emergency fund with at least 3 months' worth of expenses. A high-yield savings account is a smart choice for this, as it offers interest while keeping your money accessible for emergencies. Additionally, reading books on personal finance and business can provide valuable knowledge to build your wealth. For investing, there are various options with different risk levels. Low-risk options include high-yield savings accounts and diversified investments like index funds and ETFs, which spread risks across many different assets. Moderate risk options like REITs and starting a business can offer good returns with manageable risks. Higher risk investments include individual stocks, cryptocurrency, and penny stocks, which can be volatile and require careful analysis. Gold and silver are valuable as hedges against inflation, with gold being more stable and silver having significant industrial uses. With that said, though, each investment choice that you make should align with your financial goals and your risk tolerance. If you want to learn more about growing your wealth, then check out this video right here. But before you do that, don't forget to like and subscribe. Thank you all so much for watching. I really hope you liked this video and that you got something out of it. I'll see you in the next one.